Hi everybody, I'm Steve McDonald. I'm one of the editors at IDE. In focus today, some of the best ideas I've heard in a long time from a guy named Jeffrey Sachs. Home builders are taking off, takeover candidates in the tech world, a 100-year maturity bond, and the slap in the face award. This one is going to kill you. First up, the slap in the face award. I have to move this one to the front of the line. It's just too good. An article in the New York Times, one of my least favorite newspapers, an article this week described a new IRS requirement for businesses, and it's so crazy, you're not going to believe this. The IRS now requires businesses, in addition to filing their returns as they always have, but they must also list any deductions or entry they consider questionable and explain why they are questionable. In other words, you have to explain to the IRS where they need to look to catch you in questionable deductions and entries. They're basically requiring you to incriminate yourself. Are the folks in D.C. so out of touch with reality that they expect us to help them convict us of tax fraud and evasion? This is too stupid. If I use the deduction, I must consider it right. I mean, if it's questionable, I wouldn't put it down. And what about our right to not self-incriminate ourselves? I guess tax revenues are more important than the Constitution. It sounds like a child came up with this one. Somebody help me. Hurry, November. We need some help here. Next up, home builders bounce off the bottom. Sound familiar? It should. I've been telling you that for about 4 months. Shares of U.S. home builder D.R. Horton and Toll Brothers are up 3.1% and 3% respectively, having sunk toward the low end of their 52-week ranges as investors finally realize that the U.S. housing industry may be struggling following the expiration of the first-time homebuyer credit, but they have hit the bottom. Now, if you're a regular IDE reader and viewer, you knew this would happen 5 months ago. I told you to buy them at least 3 times since then. Think Toll Brothers and D.R. Horton. Next up, Norfolk Southern issued a 100-year bond this week. Now, it pays 6%, but you'll never see your principal. All you're ever going to see is the income. Now, here's the problem. If a company that's as well run as Norfolk Southern is issuing a bond that pays 6% now, when the 30-year Treasury is under 4%, maybe they know something about where rates will be in the future. My guess is yes, they do, and they'll be a lot higher, 6%. Which looks expensive now, will look like a bargain in the years to come. It's just a thought, but I've seen this sort of thing before. Next up, possible takeover candidates in the tech sector. Lots of merger and acquisition activity. The known deals involve the big name buyers, BHP and Pot, which is not in the tech sector, but it's a big deal. But Dell, Intel, and Google and Cisco have also popped up in the name game. Now, why are all these companies buying other companies now? One, they have lots of cash. Some of these companies have $20 and $40 billion in cash. And cash is worthless now because it's paying nothing. And stocks are cheap. So you look at all the fuss that Potash kicked up because they said the price BHP offered was too low. He's cheap right now. There's lots of cheap stocks out there, and you can bet these big buyers will be taking advantage of it. Now, here are a few names the Journal thinks are good takeover candidates in the tech sector. Now, these are the ones you want to know. They're the ones that are going up, not the buyers. The buyers normally drop in price. Here's where you can make some money. NetApp, symbol NTAP. Now, it's a data storage company, and it could go for as much as $14 billion. Lots of folks would like to have this one. Juniper, JNPR. It's a routing and networking company that would fit well in just about any big tech firm with a networking component. It's also going to go for about $14 billion, according to the Journal. Brocade, BRCD. It's the same business as 3Com, and that's the one that Dell and HP are fighting over. Cisco and IBM could be very interested in this. Isilon, symbol ISLN. Same story as 3Com and Broadcade. It's in that same business, and it's going to go for a lot of money. Now, will they definitely be bought out? I don't know. But they are cheap, and they fit well into some of the big boy schemes of things. They are worth following. Jeffrey Sachs, remember that name. He has some of the best ideas I've heard in a long time. He's a member of the International Bureau of Economic Resources. He's on the faculty at Columbia and is part of the Earth Institute of Columbia. Now, I usually don't pay a whole lot of attention to academics when it comes to practical matters, but this guy had one of the best conversations I've heard in a long time. Here is the gist of it. The $800 billion stimulus was a total waste. It did nothing but bail out the states. All of the efforts to date to stimulate the economy have been focused on the consumer, and they have failed because the consumer is exhausted and he's not spending, and he's not going to until he digs out from under the mess we've created for the last 10 years. The direction he says that we need to take is to focus on public investment that will create jobs. Hello? That seemed to be the whole idea in the beginning, but the money seemed to get diverted. Highways, bridges, dams, water and sewer infrastructure alone is going to cost $1 billion. and an energy plan, he says, is essential. I mean, these are not big ideas, but somebody's finally come out and said this. And we must have a long-term economic plan, according to this guy, starting with an energy plan that gives direction and a positive focus on the future of the economy for 5, 10, 20 years out. He said the bulk of the unemployed are young, untrained persons and older folks, myself probably one of them, whose skills are out of date. Any new spending must address training for needed skill areas. He talked about many businesses that are unable to fill skilled jobs, and the need is growing daily. Now, as he said, how can we have a 10% unemployment rate when there are companies out there that can't fill six-figure jobs? It's a good question. His last point didn't seem to be as easy to address, but it's going to be key to our success going forward. Increase exports. This is too big an issue to address here. I might spend some time on it in the next few weeks. This is going to be absolutely essential to our success. Public investment, skills-oriented training, and exports are the only way we're going to get out of this mess. I agree with this guy 100%. Search him out, Jeffrey Sachs. I pay attention to him. Google him and read what he has to say. Stay positive. We're on the bottom now, and email me your questions and comments. I love hearing from you folks. Try to have a great weekend. I'm Steve McDonald. For everybody here at Investors Daily Edge, I'll see you next week.